In this video, we will be talking about Tesla stock before Q3 earnings come out this Wednesday. What's going on, you guys? Welcome back to Daniel's Stock Bites. Here on this channel, we do 2 to 5 minute videos on high growth stocks focused in the American markets. And today we are talking about Tesla stock. And why are we talking about Tesla stock? It's because Wednesday their earnings are coming out, and I think Tesla might be a good play to buy into right now, and I'll explain my reasoning. First off, let's check out the earnings calendar because earnings season is coming up right now, and we have some big names reporting this week. Tomorrow we have Netflix and Snap, Wednesday we have Tesla, and Thursday we have Intel. So right now I think it's important for us as investors to understand how earnings are going because of this whole Rona situation that's going on right now. How is that affecting the economy? Earnings will tell us the story there. Anyways, on to Tesla stock and what I think about earnings and what I'm hoping to happen. So this article by Barrons, I'll link in the description down below if you're interested in reading it in further detail, but they talk about what to expect during Tesla's earnings. I'll give you a few key things that I picked out of here. So first off, we can see how Tesla stock has performed since their last earnings on July 22nd. It's shot up by about 34% or 35% according to this chart. A pretty sizable gain for one quarter. Also, another thing to note is that Tesla has already reported the deliveries for this previous quarter, Q3, and it came in just under 140,000 vehicles. So for earnings, the delivery number will not move the stock, because this is already public knowledge. But what could move the stock is their gross profit margins. And when we're talking about gross profit margins here, it's basically the cars that they sell, subtract the cost of those cars, and there are a few things that go into that. But I think what could increase Tesla's profit margins ultimately here are their economies of scale, as well as their manufacturing efficiencies, and lastly, design changes that they made to improve costs. Currently, I work in the autonomous mobile robots industry. In my company, we manufacture robots, which is very similar to the auto industry. So a few ways you can save money in cars are things like decreasing the amount of wiring that you use, increasing the reliability of your vehicles so you have less warranty to cover, and lastly, cutting out useless design features that only add manufacturing costs, such as complex features that require lots of machine handling time. Another thing that may be big for Tesla stock here is that if they report a profit and people get hyped up about Tesla being added into the S&P 500 again. This was denied last quarter, but it may be too awkward to deny Tesla from the S&P 500 after they continue to report profits quarter over quarter. Lastly, today there was an upgrade by Dan Ives from Wedbush, who increased his estimate from $475 to $500. And he cited this based on manufacturing efficiencies and the shining Giga 3 success in China, which will be on full display later this week after all the numbers come out. Let's jump over to Yahoo Finance to see what analysts are estimating for revenue. So here we can see the low estimate is $6.68 billion, and if that were to happen, the average selling price of their cars for that quarter would be $47,000. And if Tesla came in at the average revenue estimate at $8.26 billion, then the average selling price per car is $59,000. And if they came in at the high estimate of $9.68 billion, then the average selling price for the vehicles that quarter are $69,000. And if we jump over to a site of how much it costs to buy Tesla cars, we can see here for the Model 3 that it ranges from $35,000 to $59,500. For the Model S, it's $85,000 to $120,000. For the Model X, it's $90,000 to $124,000. And lastly, the Model Y is around $50,000 to $60,000. But granted, Tesla will sell a lot more Model Ys and Model 3s compared to the Model S and Xs. So I think the average estimate of $8.26 billion of revenue will be just in line with what Tesla reports. Maybe they'll squeak over to $8.5 billion, but a little bit unlikely in my opinion. Lastly, let's jump over the charts and let's see what we can find here. So in the charts, I've drawn a pattern that I think is a fairly strong pattern right now. We can see at this top resistance line that the stock has bounced off of it twice already, and then this lower support line, it's bounced off 3 and possibly a 4th time tomorrow if the stock continues to drop. So here we can see a wedge pattern forming, as well as if we look at the volume is declining. So I think Tesla is setting up for a big move, and to be honest, earnings is the next big thing it can move on. So tomorrow or the day after, we should probably see a big move from Tesla either to the upside or the downside, but knowing Tesla, they usually don't go down. So I think Tesla is actually setting up for an upwards movement here, especially because it's been consolidating at these levels for the past couple of months, since the beginning of September. Anyways, let me know your thoughts on Tesla down below in the comments, as well as leave a like on this video if you enjoy the content I provide, smash the subscribe and the notification bell if you're new here and want to hear more quick videos on high-tech stocks. That's all from me today, and I'll see you guys in the next one.